Hey everyone, welcome to Bald Guy Money. I am Bald Guy, and we are officially done with June as it relates to trading stocks and the price of metals. Now, for those of you who don't know, June is second only to March as the worst month for gold price performance, with basically flat price movement in the period from 1975 to 2020 based on LBMA data, as you can see here on the screen. Now, what happens after June is obviously a separate topic, and we will circle back to that shortly. But I've noticed that a lot of people are losing interest in metals as a result of this sideways price movement, and it's really a sad sign of the times that we've become so conditioned to immediate gratification that people are literally giving up on metals at what may be the most pivotal time for metals since 2011. And it's all because after 4 straight months of the gold price going up, and 7 out of the 8 months from October 2023 to May 2024 having seen price gains in the spot price of gold, people are giving up because gold went down 48 cents in the month of June. And moving over to silver, it's really very much the same of what we're seeing with gold, just with a higher level of volatility, which any of my regular viewers should be used to, as I regularly talk about the higher volatility on silver versus gold. And for that reason, I always say that gold is my preferred retirement savings vehicle and better for older stackers, more mature stackers, and that silver is my speculative vehicle, ideal for newer, younger stackers who have time on their side. Anyhow, after closing above $30 an ounce last month, which was the first monthly close for silver above that level since 2013, January 2013, we're back below at $29.14 an ounce, which is 4.2% below where we started the month, but still 28% higher versus where we started in March of this year. And despite this fantastic performance, there are still many skeptics out there who don't fully understand what's waiting for us around the corner when it comes to gold and silver prices. And that's why in this video, I want to show you all exactly what's waiting for gold and silver in the not so distant future by showing you all exactly what happens to the price of precious metals when US interest rates go down. Because as long as you're in the group of people who think the Federal Reserve can't increase interest rates anymore, and that their next move is to do what other central banks around the world are already doing, which is lower rates, then you're going to want to pay careful attention to this video, because I'm going to do a deep dive into gold and silver price performance during an interest rate cutting cycle. I'm also going to give you a forecast of potential price increases on both gold and silver over the next 3 years as we begin those rate cuts, and I'm going to finish on the viewer question for this video, which is on the topic of using gold and silver in a financial collapse. Now, just before we get into it, if you're in the USA and want to buy gold or silver at a great price from a reputable dealer, please check out channel partner Pimbex at pimbex.com to see what they have to offer. And for those of you who want to get some gold and silver in your IRA, they can help. Call them for a free consultation at the number on the screen to find out how. Just please tell them you came from the Bald Guy Money channel. Okay, so jumping right into this, in the intro I said this may be the most pivotal moment for gold and silver since 2011, when both metals experienced well-known blow-off tops, which brought gold close to $2,000 an ounce and silver close to $50 an ounce. And I say that not to be sensationalist. You should all know by now I'm not here trying to get you excited, trying to make you act on either fear or excitement. That's not what I do here at Bald Guy Money. I say it because there are multiple factors that make what's happening in the financial system and economy right now similar to things we've seen in the past. And if there are trends that repeat over several periods of the same thing happening, then I think it's safe to assume with high probability that it can happen again. So I've taken these 3 periods marked on the chart here, periods when the US Federal Reserve was forced to step in and lower rates because of immense pressure on either the economy or the financial system, but in all 3 cases I would argue that it was both, and they lowered interest rates to make things a little easier for their friends on Wall Street as well as their friends in Washington, D.C., because I am not even going to pretend that they had the interests of the regular people in mind. Now, the first period I want us to take a look at here is the one from January 2000 to January 2004, a period in which we saw the Fed funds rate, so the rate that the Federal Reserve lends money at, go from 6.5% all the way down to 1% in the aftermath of the dot-com bubble, which triggered a stock market crash that saw the S&P 500 lose a little more than 20% of its value, going from 1,400 all the way down to 1,100. Over that same period, as the interest rate cuts started to kick in fact, you can see they started coming down in January 2001, we saw the price of gold rise by 40%, which is amazing considering the fact that central banks at this time were still net sellers of gold, not buyers like they are today. And when we look at silver, we saw the same impact. Not quite a 40% gain as with gold, but a 15% climb over the same period, despite significant losses in the stock market over the same period of time, as I've already mentioned. So we're off to a good start. Rate cuts in the early 2000s resulted in increases for the prices of both gold and silver, despite the pretty significant headwinds of central banks selling gold, as well as a weak stock market. But let's take a look at the other periods to see if we can confirm this trend. And now we move to period 2, from January 2007 to January 2012. And I know this is a famous period for metals, so I won't spend too much time talking about it, but I will say that this period, out of the 3 periods that we're looking at, is the period that is most like what we're seeing today, at least in my opinion. You had a highly leveraged financial system like we have today. You had sovereign debt issues, so debt held by countries was becoming a problem in this period, as some of them couldn't pay that debt back, if you remember, specifically in Europe, and that is becoming a concern once again. And banks, well, they were really the catalyst for all this turmoil, as they were the ones taking major risks with your money, which we can already confirm they've done once again, as they were already partially bailed out in March and April of last year by the Fed's special lending program. So as you can see, there are many parallels today with what we saw here in period 2, between January 2007 and January 2012. And I say that not to scare you, but as a statement of fact. And what metals did during that period was nothing short of shocking. We saw the price of gold increase by 173% over this period as it approached $2,000 per ounce for the very first time. By the way, aided by central banks, which returned as net buyers of gold starting in 2010. That's a very important note to make. And we saw the price of silver go up 158% as it neared $50 per ounce for only the second time in its history, as people panicked about the safety of the US dollar and the financial system at large. So now we are 2 rate cut cycles into this analysis, and we have a 2 for 2, or maybe I should really say 4 for 4, as both gold and silver increased in price during both rate cut cycles despite drastically different circumstances. And that brings us to rate cut cycle number 3, the latest cutting cycle of the 21st century, so the 2000s, and that one happened between January 2019 stretching out to January 2022 in our analysis, where rates went from about 2.5% down to 0% as we went through the entire C19 saga. During this period, with central banks solidified as net buyers of gold, we saw gold go up 40%, which is a very impressive move for gold over what amounts to a 3-year period of time. And over that same period, with industrial uses for silver ever growing, we saw the price of silver increase by 45%, which confirms that during rate cutting cycles, the prices of metals simply go up, just in the same way that prices of metals go down in periods when interest rates are going up. And we saw that in 2022 as the Federal Reserve started raising rates. But as things stand today, We are not entering a cycle where rates will go up. The opposite is true. And once they start going down, the effect is going to be almost immediate. Yes, the start will be slow. It's not going to be a rocket ship to the moon on day one. Some of the price increase is already priced into the market, but nobody knows today how low rates will go or for how long. But if history is any teacher, it's that they will go lower than expected and they will stay there longer than expected, because the temptation of cheap money is just too strong for the elites to resist. And as that creeps into the system, that cheap money creeps into the system, we will see some version of these periods play out in the precious metals market, meaning the lack of number go up. So the fact that the price didn't go up for gold and silver in June is unimportant in the greater scheme of things. And that brings me to the message of this video. It's not for you all to run out and buy gold and silver today because it's going to the moon tomorrow. It's to remain patient, because the real action is still around the corner. As I said, it's coming. And those who remain patient and have a plan are the ones who are going to be rewarded. Because on average, over the 3 periods we looked at, the price of gold went up 84% and the price of silver went up 73%. And if we apply those average gains to today's prices, that means we could realistically be looking at gold above $4,000 an ounce and silver above $50 an ounce over the next few years. So I hope you enjoyed that analysis. Please let me know in the comments section right now what you thought about it. Do you think this analysis makes sense? Do you think those price targets there make sense? Or do you have something different in mind? Let me know in the comments section now, but now it is time to move on to this video's viewer question. And this one comes from a viewer named Rydor, and he is asking about how to use gold and silver in a financial collapse, asking, how will I buy gas? How will I buy food, etc.? How will the exchanges look like? If I trade the metals for fiat, won't they become worthless? There's a lot to unpack there, but it's a question that I really like, and it's one that I have a comforting answer for. Because what we've seen throughout history is a very predictable pattern as it pertains to fiat currencies, and it's why I put this life cycle of fiat currencies together a few years ago. One will rise to the top based on trust, during which time there will be others that kind of float around it that are also trusted to a certain degree. Until those people in charge of the trusted fiat currency start to abuse their power, which happens every single time throughout history. There isn't an example when they didn't abuse their power, and they devalue it by creating too much of it. It happens every single time. It even happened in the Roman times when they were actually using physical coins for their currency. And although you can never predict exactly when it's going to end for a fiat currency, or any currency for that matter, luckily for gold and silver stackers, it doesn't matter at all, because gold and silver are always valuable, which brings us to the last stage of my currency life cycle there, as you can see on the screen, when the old fiat currency is replaced by the new fiat currency. So one of those ones that were probably floating around as trusted alternatives to the majorly accepted fiat currency. And this is a pattern that we've seen numerous times, whether during German hyperinflation of the 1920s, where sometimes Swiss francs or British pounds were used to settle larger transactions, as well as using metals directly before the Reichsmark replaced those alternatives. We've seen it in former Yugoslavia, where many countries used the German mark until they created their own accepted alternatives. We're seeing it in places like Lebanon right now, where they're using the US dollar actively instead of the Lebanese pound. And I can even think of an example from a movie I saw recently called Civil War, where instead of using US dollars, they use Canadian dollars. Maybe some of you saw that movie. I was personally a bit disappointed by it, but anyhow, that was a concept that was presented in that movie. So Rydor, this is what to expect in a financial collapse. A slow transition from one fiat currency unfortunately, to another. But Rydor, you're in luck, because as this unfolds, as this plays out, your gold and silver can slowly be traded for whatever currency you need to make immediate purchases with. In fact, it's not that different from how many retirees supplement their fixed incomes with gold and silver today. Even in countries like Turkey, and we're looking at the price of gold in Turkish liras right now on the screen, where they've experienced hyperinflation. I'm sure many of my viewers, you've heard about what's been happening in Turkey lately. But fortunately, for people who had gold and silver, they have protected the value of their savings despite a constantly devaluing Turkish lira. And what they do is, when they need to, they trade what metals they need for fiat that they will use immediately, meaning that there's not much risk of a major devaluation there as long as you're using it right away. So I hope that adequately answers your question, Rydor, and puts to rest any fears you may have had, because remember this: fear causes you to react. And if you're reacting to something, it's probably already too late. Confidence causes us to act, and stacking metals is an act of confidence, in my opinion, not a reaction to fear, because every gold and silver stacker can be confident that the money that they've stored, the fiat currency, the value of their labor that they've stored in gold and silver, can be pulled out someday in the future, whether the fiat currency they use to purchase that gold and silver exists or not. With that said, that's it for this video. Thank you all very much for watching. I want to thank everybody for joining me on this journey. Please remember to like, please remember to subscribe. Just an update for all of you who are watching me regularly. Yes, this is my last video being shot from this home. I am moving countries very soon, starting my journey as a full-time YouTuber. I have officially finished working at the place I was working at, and what I want to say as I sign off in this video is I want to thank all the lovely and amazing people that I was privileged to work with over the last 16 years, and I want to make a very special thank you to my former colleague Kanchan, who made this beautiful cake for me upon my retirement from my company. Thank you so much, Kanchan. Thank you to everybody who supported me during my career. I'm very grateful for all of you, and I'm sincerely wishing you all the best in the future. Take care, everybody, and as I say at the end of all of my videos, take care of yourselves and take care of each other. Goodbye.